Hi everyone and welcome to my weekly update with me, Richard Perry, market analyst at Handtech Markets. Each week I take you through the key events I believe will be driving your investments in the coming days. Now, moving into this week, well, we've still got this dollar big bull run in place, and it'll be interesting to see if it can continue, because we're starting to see a little bit of sort of consolidation on the treasury yields and also the dollar. We've had a huge run on the dollar. It's now moving out, or moved out to the highest level since 2003. Treasury yields on both the 2-year and the 10-year are highest since December last year, when the Fed first hiked interest rates. So it's interesting to see if this run higher can continue. It's beginning to show a few exhaustion signals, and across the Forex markets we're starting to see a little bit of possibility of a sort of retracement of the move. Equity markets starting to sort of look a little bit more mixed. Commodities starting to change a little bit of direction as well. So it'll be interesting to see if this is the beginning of a retracement or if it's just another pause. Now, what we've got throughout this week is not a great deal of economic data to drive markets. We've got the Fed meeting minutes on Wednesday. That will generally tend to be seen as probably the key event of the week, and also durable goods, but much beyond that, not a huge amount. So markets may tend to sort of start to slow a little bit as this steam comes out of this dollar rally potentially. Now, what we have also got is this the Forex markets, which, as I said, are starting to come to key levels. We've got, for example, the euro dollar, which has been falling away 10 candles in a row negative on the euro dollar. That is a very stretched condition, that is, and sort of falling towards the key support 105.38. But it's starting to find a little bit of a low. Can this start to generate a little bit of recovery? There's a lot of overhead supply we need to get through, but it has turned a little bit of a corner on Monday, and it'll be interesting to see if the Americans sell off once again, because that tends to have been seen throughout last week, and this week could be the interesting sort of turning point. So that's on euro dollar. On cable, it's interesting that sterling has been holding up fairly strongly in recent days, but Friday sort of started to see a bit of a sell-off on cable. Maybe traders that are starting to target sterling rather than the fact that the euro and the yen have been sold off so enormously. Sterling maybe therefore has seemed to be having some sort of downside potential, possibly. As I said, dollar yen has started to turn a bit of a corner as well. Now, this is interesting because I've got the chart here that shows the interest rate sort of differentials, or the moving of the yield curves, and that has generally tend to be, or has been driving the positive move for the dollar at the expense of the yen. The yen has been an underperforming currency across the Forex space, so it'll be interesting to see if that sort of yield curve starts to contract a little bit, or the difference starts to contract. Maybe that will be a driver of a bit of a correction. So across your FX markets, you've got quite a large dollar strength position, but again, will that start to turn around? Now, for equities, we've seen a little bit of a consolidation. You've got a large amount of ranging conditions in these markets on S&P 500, on DAX and FTSE, the main ones that I look at anyway. The S&P 500 is trying to break out, but again, will it be able to do that? Technically speaking, the S&P 500 is probably the most bullish of the main markets that I look at. Needs a move above 2193 to break out to the upside. The Dow has already done that move, but it'd be interesting to see if the S&P 500 can follow suit. Because if it doesn't, then that doesn't bode especially well for markets generally, because the S&P 500 is a much more broader index than the Dow 30. S&P obviously has 500 stocks in that index. For the DAX, it's basically been ranging between sort of 10,580 and 10,800. Again, that has become a bit of a tight range, and sort of a large amount of sort of neutral and negative candles in the last couple of weeks. Does this mean that we're starting to run out a bit of steam? FTSE 100 is the underperformer, continues to be underperformer. That's because oil price has been lower, and also we've had that problem with, or continued problem with sterling, which has been starting to pick up, and positive sterling has tended to be negative for FTSE 100. So if sterling starts to fall, maybe FTSE 100 could start to rally, and certainly if the oil price rallies as well. We've got the OPEC meeting at the end of this month. Maybe we'll start to see that underperformance turn around a bit. So key support on FTSE 100 is 6612 to 6676. So we need to watch out for that. in terms of your commodity prices, again, the dollar strength positioning has been negative for certainly precious metals. Gold has been under a lot of pressure to the downside, massive support at 1200. Anything that sort of starts to improve the interest rate potentials for the US, it has tended to be negative for gold, and that certainly seems to be the case at the moment. The Trump reflation trade that is going on is likely to sort of mean that the Fed is going to have to engage a much tighter path of rate hikes. So that would be why you're seeing gold under pressure. If you start to see the market be a little bit underwhelmed, perhaps with comments, maybe the FOMC minutes on Wednesday, maybe the comments from Fed members in front of the Fed meeting at in the middle of next month. Again, then maybe to December, maybe the sort of dot plots maybe would be the thing that markets are looking out for driving the gold price. So a lot of things that are lining up, a lot of ducks in a row that are lining up. So it'll be interesting to see what actually happens in the coming weeks. So gold price very sensitive to the interest rates in the States. And for the oil price, which has been focusing on certainly the stronger dollar, which has been pulling the oil price down, but also this OPEC meeting at the end of the month. What are they going to be doing with regard to the production cuts that OPEC have been discussing, and now they need to show serious action towards implementing. So what about the key economic announcements? Well, as I said, not a huge amount on the list this week. Bit of flash PMIs, bit of durable goods. Nothing really that is going to enormously change, I think, the direction of the market. I think it's going to be moving more on sentiment from treasury yields and also the dollar this week. But a little bit of Japanese inflation at the end of the week, but nothing too significant really whatsoever. So with that in mind, I wish you good luck in your trading this week, and I will speak to you next time. Thank you.